Hello students. The accounting fundamentals topics that we are going to cover today are bookkeeping and accounting. Let's take a look at bookkeeping first. Definition. Bookkeeping is the process of recording financial transactions in the accounting records, the books of an entity. All transactions are analyzed into different types and are then recorded in a series of individual records called accounts. There is a separate account for each different type of transaction, or that is to say, for each type of asset, liability, income, expense, and owner's capital. Double entry bookkeeping is used to record those aspects of transactions in systems designed to allow the management of the business to monitor its progress and produce periodic financial statements and performance reports. Okay, let's break down this definition and understand it in easy terms. Basic idea: bookkeeping is like creating a detailed diary for a business. It's a way to keep track of all the money related activities that happen, such as buying things, selling things, paying bills, or receiving money. Recording transactions. Every money-related action is written down in this diary, called the books of the business. Each action is categorized into different types like assets, things the business owns, liabilities, debts or obligations, income, money earned, expenses, money spent, and owner's capital, the owner's investment in the business. Double entry bookkeeping. Now, double entry bookkeeping is like a safety net to ensure accuracy. For every entry made in the books, there are two parts, a giving part and a receiving part. It's like a give and take system. If the business spends money, it also receives something in return, like goods or services. This ensures that the books always stay in balance, just like a scale. Purpose. Why go through all this trouble? The purpose is to help the business keep an eye on its progress. By regularly looking at these recorded transactions, the management can see how well the business is doing. They can also create reports summarizing this information, which helps in making informed decisions and understanding the financial health of the business. Real life application. Imagine you own a lemonade stand. Bookkeeping would involve noting down every time you buy lemons or sell a cup of lemonade. Double entry bookkeeping would ensure that if you spend money on lemons, you also account for the increase in your inventory. This way you always know how many lemons you have and how much money you've made.